You're here in town to also accept an award for Best ESG
yes,
program?
in ESG. It was a nice
dinner?
Yeah, good event,
Okay.
well represented.
Okay, yeah, so we'll talk about your efforts in just a moment there because you wear two hats for the group. I wanted to start off with someone sees the CFO of Ayala here. They're going to be wondering what you guys planned with your balance sheet and funding this year.
Yeah.
Do you have anything sort of to tell us?
You know,
Give
it's
us an update?
just maybe by way of backdrop.
Yeah.
The last couple of years, in fact, have been the largest investment years for the group, despite COVID. We were able to do that, I guess, because generally we run very conservative balance sheets and continue to do so. It's gotten levered up a little bit given the softness in the markets, but we're seeing the markets starting to come back. In many cases, we're exceeding pre-COVID levels already. So that's quite encouraging. Growth has been there in the market thus far, despite the global headwinds and all the, volatility in the markets. The basic consumption in the Philippine economy continues. So we continue to fund. This year will be slightly less than last year as a group. We're probably 10% less, but that's still a significant amount.
Are you looking to raise new money, though, for funding for next year?
We just recently did a preferred share issue.
Yeah.
We like to tap different segments of the market to diversify our funding requirements. And part of, I guess, the liability management is you get a whole host of different instruments. Some get really treated like equity. Some are debt, some are different markets, etc. So we were able to raise preferred shares of about 13 billion pesos, which is by and large what we at the parent will need. The various BUs are still in the process of going to market. We try to time everything, so we're going to market in a sequenced approach. And then towards the end of the year, we'll revisit if there are opportunities for liability management type of exercises, then we will.
We've been talking about, EM Asia overall has the inflation dynamics are so different from what we're seeing in developed markets here right now. And at least in Philippines' case, things are cooling down quite a bit when it comes to prices. Overall, how does that impact your business in terms of margins, and how do you look at it longer term?
Yeah. So the Philippines is still a consumption-led economy. And so we saw early part of the year some softness in the businesses where we are more consumer-oriented or exposed. But we're starting to see that get a little bit more buoyant of late. And so, inflation does impact the broader consumption cycles. But we're starting to see, with the softening, improvements in spending. So we're cautiously optimistic about the balance of the year.
And is it the right assumption to make, we have the central bank governor quite regularly on the show. Is it the right assumption to make that rates, generally speaking, will be at lower levels next year and perhaps lower levels the year after that? Is that a good starting point?
Based on everything we see, I think that's a logical conclusion. I think, obviously, the question in the near term is there one more hike baked in, and what the balancing between addressing domestic inflation versus keeping our currency in line with what happens in foreign markets. So that's the balancing act that I think the central bank needs to constantly manage. But I think on a longer term basis, the fundamentals do point to a lowering of interest rates.
Right. And
it's embedded. You can see in the curve, right?
Yeah.
Further out.
Right. And the fact that you're not getting a fall, a drop-off in demand is a good thing, to your point. And the fact that you're looking to space out your sort of fundraising activities, I guess, gives you confidence in the market. I want to shift from your CFO hat to your Chief Sustainability Officer hat. I think the starting point I have is, Yvonne and I were here yesterday. We were speaking with the IFC, and they talked about the difficulty, really, in emerging Asia for the conditions for a lot of companies that they have to deal with, because a lot of you guys are starting at zero. So what is your starting point? How are you dealing with growing pains?
So there have always been climate resource related activities across the group in different forms and shapes. What we did in 2021 was commit to the science, so that as we embark on a more structured and diligent approach towards reducing our emissions, that we could predictably say we were contributing to the broader targets of reduction. And that's why the first thing we did was engage a consultant, South Pole. They've done quite a bit of work. And we're just on the tail end of finishing up the measurements of all of our emissions. We used to monitor Scope 1 and 2. We've expanded that to 3. And we're now in the process of undergoing verification of those, that data, starting to think about our interim reduction targets towards a net zero by 2050. As you can appreciate, our businesses are quite different. While we're all focused on 2050, in reality, it'll take different time frames for people to address. And so it's a bottom-up approach based on a top-down commitment.
How do you measure overall your footprint? I mean, obviously, we were just talking about with IFC. I mean, the standards aren't quite there, right? I mean, there's nothing to really kind of guide it by. I mean, how do you look at overall?
And measure progress.
Yeah. So some parts are easier to measure. Some parts we will have to use proxies. And I think when we look at measurement, it's always work in progress. It will never stay still. Part of that is you get more insightful in how you measure. Part of that is you're expanding as a business, and you will be getting. And so I think people have to be conscious that there will be disclosures that will evolve through time. Now, what we want to do, cognizant that there are concerns from various stakeholders as to the veracity of the disclosures, is that we will subject our disclosures to verification, to external verification.
As a CFO, and let's combine the two things, as you look at your balance sheet, and I guess ideally speaking, your business operations and becomes more sustainable. You can almost not distinguish them anymore at some point. I guess, does the sustainability part to the debt of your balance sheet, do you see that increasing more as a piece of the pie? Is that necessarily the case, for example?
So I think there will be, and this is a personal opinion, I think there will be initial phase where people will be trying to incentivize sustainability efforts.
Right.
We worked with IFC as an example on a couple of situations, and they've been extremely helpful. I suspect at some point in time, it will have to be so fundamental that it will be built in, not necessarily just access, but the rates you will pay. So think about a typical credit rating process, right, where depending on your rating, then you get or deserve certain spreads over the benchmark. I think that's where it will lead to eventually. In the near term, as we go through transitions, I think we will see what I call a carrot and a stick type of an issue. We have benefited from various green financing options. We did that in BPI to be able to fund smaller scale companies in their green efforts. That was together with IFC. We did green bonds with ASEN, our renewables group. We did a social bond, again, with IFC, as it pertained to a specialized use, which was to build the Philippines' first cancer hospital. And we're looking at various other types of structures that are emerging in the marketplace, just so that we start to get familiar with all of the evolving green financing structures in the market.